Good morning, traders. It is Tuesday, December the 3rd. Taking a look at the charts, we got some pretty big price action unfolding, just like we were anticipating from last week. Last week was a holiday week, and the market was just on this never-ending grind to the upside with really absolutely no fear in the market. We saw record levels of low fear on the put call ratio, on the VIX, also on all the risk off assets. Everybody was just moving out of the safe havens. And of course, once they all do that, we start to see this shift. Yesterday, big down day in the equities. Today, we're already down 1% this morning. Big volume you can see on the futures here. So there's some heavy volume. We talked about it over the last week and a half. Actually, it's been about 2 weeks. We've seen the occasional big distribution day, and the average trader wouldn't, or the average trader investor wouldn't see that. But we talked about it on the charts several times. I think we've had 4 or 5 distribution days now pickled through here that clearly shows big money has been just scaling out of the market, anticipating a market correction, and we're starting to get that now. And overall, today it looks like we're going to have a signal. Potentially get long a risk off asset like bonds or potentially gold. Bonds is actually set up better than gold at this point in terms of a short-term technical trade. Gold hasn't really reversed the momentum to the upside yet. It's still trending down. Overall, the equities market, a quick pullback like this, it might take us a few days to see how it reacts and how the technicals start to erode for us to get a potential short signal for us to play a quick downdraft. Overall, the support levels for the SP 500, typically the 5-day, and then you got the 20-day, and then you got the institutional level, which is around the 50-day down here. And of course, 50-day is this breakout level. It's near this previous high, near these two previous highs. So these are the levels that we could start to see this unwind. Now, overall, we could see the market consolidate, form some little bear flag here, and then continue the second half of that leg down. Overall, the market is showing some signs of selling. Big distribution going on yesterday and even bigger this morning in pre-market. Now, if we take a look at the safe haven plays, bonds are up 0.8%. So yesterday, bonds dumped out, sold off. Today, they're regaining that move. Overall, they are working themselves to have an upward bias in the market. And we could start to see more money pile into the safe haven plays. Now, if we take a look over at gold, it's up 0.8%. You can see it's actually having a nice pop today above the 20-day. It's been stuck under it for a little while. It's hooking to the upside and picking up traction here, but overall it is still also in a downtrend. But money is starting to flow into these safe haven plays, and silver's up 1.4% this morning, popping. It's still testing this recent high from about a week ago, but overall we're definitely seeing a flow into the risk off today. And the big question is there going to be follow through, or is this a shakeout in the market? So overall, we're starting to look at money. Overall, we're seeing money go into the risk off across the board. We'll see how utilities do today, but overall, and also the bonds, we'll see what the high yield bonds do in terms of getting into a position. Looking over at, let's take a look over at the US dollar index. Looked at this yesterday, it pulled back today. The dollar index is down really big today again, and that's really helping really send the market higher. I'll post a chart later today showing you the dollar, the big picture of the dollar, and how we're potentially close to a big rally in the gold market with the dollar potentially plummeting or at least trading sideways at long-term resistance. Gold could continue to move up and pick up speed. Now, again, yesterday we talked about how the natural gas, when there's pure fear in the market, we tend to see natural gas pop. Yesterday there was fear in the market, natural gas popped 3%. Today there's more fear in the equities market, and we're seeing this pop again. It's up 3.5%, just over that this morning. So it is trying to carve out a bottom, but again, we had a huge oversold move down into long-term support, and at this point, it's a knee-jerk reaction bounce, and we're at the 5-day. Again, we're looking for a bottom to form, but this still could take some time. It might form something over a period of time here. This could take a month or so. You never know. It could be a V-shaped recovery and take off, but really we need to let the market start to form some type of pattern. At this point, it's still in a downtrend. This is a short covering bounce, and we'll see if it can get some traction and start to move higher. But at this point, the odds are still there's going to be some more downward move or sideways trading it. Looking over at crude, down 0.8%. It's really testing and potentially threatening this this breakdown zone. If we were to throw a trend line across these lows, you can see here we kind of closed below it. We're still holding up above this, excuse me, this key level, but we do have a drop. We've got a little bear flag or pennant formation if you go from the candle highs, and this is a potential move. The second half of the move would bring us down into this level, which brings us into this pivot low and more or less through the heart of this level, which if this pivot low is broken, we could see it extend even further. And then again, if it breaks 51, we're going down to potentially 44 or $40 per barrel. This might be a setup for us to get into an inverse play for an unwinding event. But crude is the way crude's been moving. We've seen these very sharp moves happen back to back. 2 big down days, 2 huge up days, massive down day. Really, the volatility is picking up. That usually means we're getting close to a turning point. But again, usually tops and bottoms become very volatile, and they do increase some risk. But looks like we're forming a bit of a bear flag, but we haven't really broken down fully yet. Last but not least, take a look at the VIX. The VIX here finally popping. Big update yesterday in the VIX. Again, it's up about 12%, 11% this morning. If we go and take a look over at TVIX, I meant to mention this yesterday. Again, TVIX is trading at pre-market at 77.89, 77.20, 77.20. So it's trading up here near this previous high. Now there was a reverse stock split. I don't know if you can see it on this chart. You can see here a 1 to 10 reverse stock split. Now, leveraged ETFs lose value over time, even though the VIX traded sideways and actually slightly higher. We see the VIX just continue to lose value, much like an option in the last month, where there's the theta, the time decay, just eats it to death. Overall, we're seeing a pop today. But we got this inverse stock split, and ETFs lose value over time, the leveraged ones. And when the value gets really low, down that $6, $7 level, every penny starts to become a fairly significant percentage-wise move. So the market makers and the funds, they do a reverse stock split to get the price back up. So every penny isn't quite so drastic of a percentage move, and it can move much more closer to the ticks with the VIX percentage-wise, even though obviously it doesn't move that closely. But I know some of you are looking at like a 10,000% or 1,000% return with this price, and unfortunately it's exciting to see, but again, you would have ended up with a tenth the amount of shares, but the value is worth 10 times more. And yeah, sorry for that confusion. You got to really keep on these leveraged ETFs when the value gets low. The brokers automatically do the splits. It's all done automatically in your account, but you can get a little excitement when you see the TVIX up, 1,000% overnight, but really it's just a reverse stock split. Anyway, that's it for this morning. I'll send some updates. We might get a trade today in the risk-off assets. It looks like there's a sentiment shift going on in the markets, so get ready for a potential trade alert. Take care. Bye-bye.